Hello and welcome everyone to Gold Asset of the Day for the 11th of June, presented by myself, Phil Carr, at the Gold and Silver Club, and we'll be reviewing gold for the week ahead. So first of all, what do you need to know about gold as we continue throughout this week? There is a major news item that you want to have in your trading diary, which is Wednesday, the 19th of June. So you may have seen last week, we saw comments from Jerome Powell from the Federal Reserve that essentially the Fed were in a position to cut interest rates. And with that, we immediately saw the dollar sell off last week. And last week, that was further compounded with a breakout to the upside on gold, following on from non-farm payrolls, which was a large miss. And we saw gold break out to 14-month highs against the dollar last week. We've broken out to 1,348 US dollars per ounce. So we've effectively seen the biggest move here on gold to the upside, breaking above 14-month highs and breaking above the February swing highs as well. However, we have encountered resistance, which is just under 1,350 US dollars per ounce. I've spoken about this before, but you really want to keep an eye on those magnetized levels with a lot of markets, but gold in particular tends to really hold and provide very strong resistance at very key levels. So 1350, a lot of traders were looking at that level for taking profit off the table and also potentially looking to sell short around that level as well. Whereas in the latest week, hedge funds and money managers, they have increased their overall net long position. So you really want to watch this. I've got the chart behind me at the moment. It's just showing gold on the weekly chart. And what we're seeing very clearly is overhead resistance at 1,300 and just under 1,350 US dollars per ounce. So we tapped $1,348, sold off over 200 points to the downside, in fact, after the open on Sunday through to Monday, as a result of the escalation in trade war tariffs between the US and Mexico, which really helped gold get the safe haven bid and break out to the highest levels in over a year. That started to dissipate a little bit over the course of the weekend, where fresh negotiations between the US and Mexico have led to somewhat of a deal, which has now given gold less of the safe haven bid at the start of this week. So gold's a bit on the back foot. It is breaking down from that 1,348 US dollar per ounce level, and we're seeing it find support at 1,320. That's actually going to be a really key level here. So 1,320, I've just got behind me the weekly chart for gold at the moment. You can see very clearly that's been a major level of support, previous resistance turning support at the moment. I would look at the range this week. Again, typically gold tends to move within a 200 to 300 point range week to week. More recently, we've seen very significant breakouts to the upside last week as a result of a few points there. So one was the fact that the Federal Reserve have now put it out there, their willingness to potentially cut interest rates, which has seen the dollar sell off significantly last week. Gold propelled higher. We've also seen gold get the safe haven bid here as a result of the trade tensions between Mexico and the US last week. So we were seeing gold essentially getting well supported, and non-farm payrolls, which was a huge miss on Friday, provided a further breakout to gold to the upside. Next week's FOMC statement will really be very important for those of you trading gold. For this week, I would definitely keep a lookout for that supportive layer at 1320. If we do break below $1,320, I'll look at the next real key levels there, 1315, 1310, 1300s, for example. It might be that if 1320, which is holding support at the moment, if that does hold, you might then see a revisit back towards that 1330, back towards the 1340 zone, consolidating this week ahead of the FOMC statement next week. We're just awaiting more narratives and essentially more rhetoric, especially regarding the Federal Reserve and what they're looking to do as we go into next week, the monetary policy, the meeting, which we want to look out for very clearly, the FOMC statement next Wednesday. That's definitely really important for you to have in your diary. You really want to look at research-based trading when you are trading the commodity markets, especially gold, especially oil. You want to look at what the hedge funds and money managers are doing. They have increased their net long positions on gold in the latest week. Very important. You, of course, want to look at what the Federal Reserve are doing. At the moment, they're looking to potentially cut interest rates. We've got the FOMC statement next Wednesday. That could provide a really big catalyst for a huge move here for the gold market as we go into next week. You really want to be up to date with the narratives in the market. So what we're seeing with respect to the US and China trade war negotiations, you can see what big impact just at the weekend a potential deal between the US and Mexico has had on gold. Not so much a safe haven bid off the back of that, because we've seen a lot of profit taking after some sort of deal has been struck between the two nations, and with that, gold immediately sold off to the downside. So just keep on top of it with respect to the latest fundamentals, the news developments, marry that up with exactly what I'm mentioning today. And again, the key points you want to look out for, I mentioned 3 again. Okay, so this week you want to look at keep an eye on hedge funds and money managers. Their overall positions keep accumulating to the upside. So overall, net long positions have increased. Next week, on Wednesday, we have the FOMC statement. That's going to be on Wednesday, the 19th of June. That will be a big catalyst for a major mover. And also just look to trade that range on gold this week from the key levels that I've just mentioned. Really look to capitalize on that range-bound trade. So with that, that has been Gold Asset of the Day, and I wish you good trading.